So what exactly is your approach to the market, and what are you trading?
So right now I'm trading indices. I still trade CFDs. I'm trading a little bit of commodities. I trade futures, and I actually just recently started trading options a little bit as well. Which throughout all of the different markets and instruments that I trade, my approach is essentially the same. The only thing that may actually change is what time frames I'm actually trading. So with options and futures, I'm trading smaller time frames.
Like trading stock options?
Yeah, stock options. And then with commodities, I'm trading a little bit larger time frames. So essentially, every single day I'll approach the markets after my fundamental analysis. If there's any economic data supposed to come out that day, let's just say it's a clear day, then I'll just continue to trade as normal. So, I mean, there's a few different rules, but overall, the approach is I'd start off with a top-down analysis, look at what the daily time frame is doing and what the daily time frame has done over the last few days, and analyze like the most recent trading days candlesticks. Then I'll break it down to a lower time frame, like the 4-hour time frame. Look at the market structure, look at the price action, look what happened overnight, what happened in the pre-market, and then also what could potentially happen in this specific session. Then I just start breaking it down to like an hour time frame, then 15-minute, then a 30-minute time frame, then a 5-minute time frame.
Time frame.
Every single time frame. So like I'll mark up my main key levels on the day. I'll also look at the market profile and TPO charts as well to see like where my main levels of interest are also going to be as well. And I'll just literally take it from there. So after I mark up where my main levels of the day are going to be based off the market profile chart or based off of just regular key levels and support resistance or supply and demand, I'll start to plan what levels I'm going to look to take trades from. So if the overall trend is bullish, but the lower time frames are bearish, I may actually wait for some form of a bullish signal to potentially buy that market. Or if maybe we're at a high and we start having like bearish confirmations on the lower time frames, then I'll start to plan how I'm going to potentially look to take shorts. And if I am going to be taking counter trends on shorts, then it's like, okay, well, I'm going to lower my size on this type of setup, and I'm not going to be looking to marry this trade, versus like if it's a trend continuation trade, I may increase my size and I may actually look to hold that trade for a little bit longer. So this is all done in the pre-market. So that way, when the market actually does open, all I have to do is just simply wait for price to get to my area, my level, and then I'll just take the plays that I initially set out to take on that specific level. So initially, like on the day, I'll have maybe like 2 levels where I may look for continuations, and then 1 level where I'll look for some form of a reversal. And then based off of those 2 levels, I'll either look for a bounce play or a break and retest or maybe like a breakout setup. It really just depends. But the system itself and the plays that I'm taking on a daily basis are the same. And my approach is always going to be the same. It's just, again, price action is not always going to be the same day in and day out.
Yeah. And what kind of like holding time are we looking at here for your trades?
So long term for me right now is like 2 hours.
Yeah.
That's like long term for me. On average, it's about maybe like 15 minutes. It depends. Like if I'm trading futures, 15 to 30 minutes is pretty average. With stock options, it's maybe like probably like 15 to 20 minutes, still kind of around the same, except, it moves like crazy when there is volume. So I'm in and out very quickly too. And I also don't want to hold trades for too long there, but I'm a lot more confident with holding certain positions. It also depends if I'm trading prop or personal too. Like if I'm trying to go for a prop challenge because I want to see how this company is building out their business model, then, there's so many different approaches. With like the futures firms, they all have so many different rules. But when it comes to like my own personal main trading accounts, it's really just trying to let my winners run for as long as possible. Because now I feel like, especially with Trump in office and the moves that we've seen are pretty much going to be moves that we're going to see over the next few years. So instead of, going from like that, like quick scalping where like maybe a year and a half ago, my positions would maybe be like 10 minutes, 15 minutes, looking for quick 2R multiples, 2.5R multiples. Sometimes now I'm really trying to shoot for bigger R multiple trades and really try and let my winners run for as long as possible, because I was going over my data over like this last year, and one thing that I was doing horribly on was holding my winners. There were so many trades where I cut it at a 2R, 3R, and it could have ran to like 6, 7, 8R. And I'd be so much more profitable in the year.
Yeah. So how are you going to combat that? Just use trailing stops? Or take partial TP and then let the rest run with the trailing?
So the thing I don't like about partial TPs really is like you're taking a lot off early on. So for me to like remove 50% of my position at like a 2R and then remove like another 10% or 20% at like a 3R, I would much rather hold the position for longer and just trail my stop loss based off of our multiple. But the tricky part about it is depending on the market conditions, whether we're in a ranging market or whether we're in like a really good trending market, would determine the results on moving on how I move my my R multiple. So if I throw my R multiple or if I throw my stops by R multiple, then in those situations, I'm going to find that I'm going to get stopped out pretty quickly because my stop losses typically are pretty small. I don't really trade very large stops. My take profit's also pretty small as well, but that increases the probability where if I move my stops to break even at like a 1R, then I'm going to get tapped out more than not. Versus if I maybe move it to like, if I move my stop down 50% of where my original stop is at like a 1R, it leaves me a little bit more room and a little bit more chance for me to really try and let that winner run. So I'm still kind of in the process of how I want to do that. But the way I'm currently trailing my stop loss now is based off of my targets. So if let's call it like ES is pushing into a major level of resistance, let's call it, where there's a lot of resting liquidity on the heat map, and you know we've tapped into that area, and that's one of my main targets where I'm like at a 3R, then if I don't see like an immediate breakout and a break through that specific level, then that's when I'm just going to close and cut the position. Versus if price breaks right through that level, and instead of being up 3R for my main targets, I'm up 4R, then I'll move my stop loss to that level. So then that way, at least I secured what I set out to actually secure, and anything else is just like icing on the cake.
Yeah. And are you using like volume profiles, like book maps and stuff to analyze your trades?
I'm getting more into it, but honestly, like I don't really use the book map too much. I'm a little bit more into the footprint charts compared to the book map, because I feel like there's a lot of noise on the book map. Like there would just be like a ton of liquidity resting.
I used to use it for a bit, but it got noisy and conflicting signals, and I was like,
and I'm like, so like I'll look at it now to really just see how many orders are actually coming in, and you can also see that on the foot map, on the footprint as well. But to be honest with you, like I wouldn't really say like I'm super deep into order flow. I'll look for like certain confirmations on the footprint charts, but I'm way better of a price action trader than an order flow trader.
Are you mostly just supply and demand, or what's your?
Yeah, I would say my foundation is supply and demand.
Yeah. I think that's anybody who's trading price action, supply and demand is just the basics. So
yeah, to me, it's what makes the most sense.
Yeah, it is. It's like basically the core truth of how price moves.